Hello again, Tony Marlette Jr. here at Brookside Tax and Financial Group with the February market update. As always, we encourage you to like, comment, and subscribe to our YouTube channel and our Facebook page as well. Markets came out swinging in January despite the fact that there was no real data changes. Investors tend to be optimistic for 2023 with a less aggressive Fed, as we've already seen, hiking up interest rates at a little bit slower of a pace and by not as pronounced of an amount, being a little bit less aggressive. GDP did reflect some growth as well. And there is a belief that the worst of inflation could finally be behind us, even if we're not going to get anywhere near our 2% historic average by the end of 2023. Unemployment checked in near a 50-year low, but this could be misleading as there have been layoffs that have been coming and then refilling of jobs due to the effects of the pandemic as well. Stocks and indexes that were hit the hardest in 2022 have been the strongest in 2023 so far. And we're referring to the tech-heavy NASDAQ index and then the Russell index, which represents small cap stocks that tend to lead us out of recessions. So the big question here, obviously, is can this last? A strong January is usually a positive indicator for markets, and we have not seen back-to-back negative years in the markets since 2000 to 2002. If we have indeed seen the bottom, then we've been in a bull market since October. Now, that does not mean that there's no more concern for volatility. Again, inflation is improving, but it's nowhere near over. We anticipate layoffs having an effect on spending as well. And in previous updates, we've mentioned how that could negatively affect the economy when it comes to consumer spending and consumer confidence as well. So remember, there's never going to be nothing going on in the markets. This is why we encourage investors to balance optimism and prudence. Growth assets should remain as growth assets. Safe assets should remain as safe assets, regardless of market conditions. You make changes when your circumstances change. Remember, markets are incredibly hard to predict on a year-to-year basis, but staying invested during bad times will offer rewards during the good times. Lastly, if you call or visit us online or stop in and schedule an appointment, you reference this video, not only will your consultation be at no cost to you, you can also pick up a copy of one of our books on retirement planning and estate planning as well. From all of us at Brookside, we wish you a happy tax season, and we look forward to continuing to work with you in the future.